Welcome, everybody, to the newest edition of the Orange Wheel podcast, the podcast where we support business leaders in understanding Bitcoin and the monetary transition. I am joined here today with Elliott Johnson. Elliott is the CEO of Bitcoin Treasury Corp, BTCTC, Canada's largest Bitcoin treasury company. He's joining me today from Toronto, Canada. Elliott, how are you doing today?
Hey, I'm great, Ted. Thanks very much for having me on your show. I'm doing great. It's nice to be ending a very exciting year, eventful year.
Totally. 2025 has been maybe not what everybody hoped it would be, but certainly an exciting year to follow in any respects within the Bitcoin ecosystem and certainly macroeconomics, geopolitics at large. We're recording today on December 19th, so this will be the last recording for me this year, certainly. So Elliott and I are going to do something a little bit different today. We're gonna kind of do a classic interview for the first 30 or so minutes, and then we're going to do a fun predictions game. We'll do over under on a few topics about Bitcoin adoption 2026. Something I've never done before, but I think it'll be fun in any regard. So Elliott, for those who might not be familiar with yourself or with Bitcoin Treasury Corp, it'd be great to hear your background and then talk a little bit about the formation of Bitcoin Treasury Corp and the listing that happened earlier this year.
Yeah, sure. So in addition to Bitcoin Treasury Corp, I'm also a partner in a business called Evolve ETFs. We're an $8.5 billion ETF manager in Canada. We started the business in late 2017, so about 8.5 years ago as well. We have 39 different ETFs at Evolve, of which 7 are digital asset ETFs. We were a pioneer in the digital asset ETF space. We actually filed for Canada's first Bitcoin tracking ETF in 2017, but we didn't get an ETF until 2021. It took us 4 years of working with the regulators to get to the point where we launched our Bitcoin ETF EBIT back in February of 2021 alongside another competitor who also managed to get there on the same week as us. And so we've been investors in Bitcoin. We've been talking about Bitcoin. We've been trying to share the message of Bitcoin and explain why it's a critical asset to our future, to our economy, for investors, for savers. We've been doing that now for more than 4 years. And it's been a very interesting experience going through that process because, of course, over those 4 years, the relevance of Bitcoin has only increased. And I mean, anybody who's been following it obviously has kind of lived this story. But in 2021, and even more so in 2017, people viewed Bitcoin as a very speculative asset. And they thought, okay, fine, could be a fad. Maybe it's just kind of the latest and greatest, investment fad, but it'll come and it'll go. And then I think the inflationary shock that happened through COVID really woke up a lot of people to the need for hard assets and the need for hard money, and caused people in a lot of cases for the first time to think about money and what money is and why they need Bitcoin. And a lot of times, Bitcoin then starts to be in the same conversation along with gold and real estate and so forth. So we've lived that journey as an asset management company. I've lived it myself as an investor. And to kind of, get to the point where we got to a year ago where we started on building Bitcoin Treasury, I had over the previous 3 or 4 years really increased my personal holdings to Bitcoin such that it essentially is my only investment holding outside of, our business and, my house and my car. Because over time, it just increasingly became clear to me that despite its volatility, I actually very much view it as a low risk asset that is working for me to defend my purchasing power into the future. And that's ultimately what investing is. And so I think that, the interesting thing about it, and I feel like I've spoken to so many Bitcoiners over the past few years, and it's such a wonderful community of like-minded people who are very supportive of one another. You end up coming to a point where you sort of, you become more and more comfortable with an increasing exposure despite its volatility, because you sort of realize where the problem lies as you become more and more aware of inflation and the challenges we have around how to invest for the long term. And as you become lower time preference, which happens when you have kids or you reach a certain age in your life or you're looking further out, it becomes a much more compelling thing to consider. And so I got to a point, at the end of last year where I had such a large allocation of Bitcoin personally, but like every other Bitcoiner, I just want more Bitcoin. I mean, it's not very complicated, right? Because for the same reason anybody wants more wealth. And I had the pleasure in early 2024 of meeting Michael Saylor. I was a guest at a function he hosted at his house in Florida, and I'd spent a lot of time thinking about MicroStrategy, or strategy as it's now called, and taking a close look at it. We came to the conclusion that there was a gap in the market in Canada. And really, the opportunity here, we think, is that Canadian investors don't have access to Bitcoin if they're constrained by investment mandate in Canadian equities, right? They did, you could buy miners, but miners aren't exactly the same as a true Bitcoin treasury company, because the mining stocks have so much capex and opex ongoing cost pressure, plus the upgrade cycle and the hash rate going up. And it's a very different business than just Bitcoin. If you're constrained by a Canadian equity mandate, you can't buy Bitcoin ETFs because you need to buy Canadian equities. You can't buy foreign equities. And so we thought, okay, you know what? There's a market here in Canada that we thought was addressable, and we needed to build a vehicle to address it. And so that was the beginning of the thinking around Bitcoin Treasury Corp. Can we build a Bitcoin accumulation company? Can we list that company in Canada? Can we attract investors in Canada who are starting? I would say overall, the investment community here is still in the early stages of thinking about Bitcoin as an investment asset. And I think particularly those people who are running, mandates like constrained equity mandates are even further behind perhaps than like retail investors who, just think about all things they can buy in their brokerage account. They've been using ETFs for a long time. And essentially we were just saying, well, what would it take to build a company that can meet this need here in Canada? For the same reason that I think we're all in this business in the first place. By business, I mean Bitcoin, is we're trying to spread the opportunity set as wide as possible, because we see the value that this brings for people, and we see the need to get access points where people are, right? Like I'm very much of a belief that you need to meet people where they are. That's why the ETF was such a powerful construct, because most people's wealth that they invested was in brokerage accounts, and in a lot of cases registered plans where they needed to get access to something held in an account. And similarly, if you're in an equity mandate, you need to buy equities. Similarly, if you're in an equity mandate and you start to see what's possible with Bitcoin, you may start to think about Bitcoin companies because the return on Bitcoin over time has beaten the ROIC, or the return on invested capital, of, I think, all Canadian equities. I mean, I don't have the exact stat in front of me, but I'm pretty sure, if the assumption of a 30% Bitcoin rate of return, which a lot of people use as a kind of general number based on historical and where we're going, I believe that beats, certainly the larger cap equities in Canada. So these things start to come together, but you got to meet that audience and you've got to talk to that audience. And it's a long process, but we've been in this process for quite a long time. We've got a very good platform at Evolve, talking to the general public, talking to retail investors and institutional investors. And we took this message into Bitcoin Treasury Corp, which is a separate company. I'm not speaking as a representative of Evolve here today. I'm speaking from Bitcoin Treasury Corp, but it's the same audience that we've been talking to for quite a long time. And so that was the idea behind it. That was the idea of why we wanted to put it together.
Yeah, I mean, certainly quite an impressive in how rapid you were able to kind of execute on that kind of concept to execution. And I guess, as you said, having that kind of foundation based on Evolve and the relationships with the capital markets and with Bay Street and investment bankers and so forth, I suppose that provided the basis for which to move quite rapidly. But even then, I must say, I mean, going from 2024, the discussion with Saylor, to an IPO in Q2, was it Q2 or early Q3 2025? I mean, that's a very impressive execution pathway.
Well, thanks. It was a huge amount of work by our team and our partners. We did have a great support of bankers. We had 3 of the big 6 Canadian banks in the syndicate, BMO, National Bank, and CIBC. We were led by Canaccord, Genuity, and Stifel KBW, who have really been leading tech and digital asset banking in Canada for quite some time. And then we had independent retail in Canada participate as well, because of the relationships we have there. And it meant we had a much wider participation than I think most people would have expected. And, I do think it is fair to say that we've done some pioneering work here. I know some people look at us and they go, well, you're just trying to copy what MicroStrategy has done, but their path was very different than ours. I mean, Michael Saylor started a very successful software company a very long time ago and reformed it back in 2021. we were starting from zero, trying to put something together that had not been built and launched in this way before, and not from a standing start. So I couldn't be more proud of our team. I really do have the pleasure of working with some of the best people in the industry, and definitely the best people that I've ever worked with in my career. But that also extends out to our team of bankers, partners, legal counsel, everybody. I mean, it was quite an effort to get this done. So yeah, I mean, we're very, very proud of that. It was not easy. We've now plowed the sidewalk for others, and to some extent, I always have the view that I don't really mind competition. I think it's much more positive sum game mentality that I have about investing overall, and especially with Bitcoin. And I really do believe that to some extent, our company is going to serve as a proof of concept to other public companies that using Bitcoin as a treasury asset for their businesses will enhance their existing businesses. I think that's actually probably in the long run going to be the great gift that comes out of the treasury company wave that we saw this year in 2025, is that it's going to force everybody else to take a look and say, okay, what can I do with Bitcoin in my business? And that's why I do think that the world is not, Bitcoin maxi, no more brokers. You're either Bitcoin or you're not. Like, no, it's going to be a mix. Everybody will have it in their lives. Companies will all have it as part of their companies, but they'll still do the great things that they do with their existing businesses. They're just going to be freed from the one thing that's been hurting them over time, which has been the declining value of their cash asset if they're holding cash, right? And I'm sure, Ted, you've talked about this at such great length. Your audience obviously knows what we're talking about here, but this is the problem. It faces us as people, individuals. It faces our children as they plan for their future, and it faces companies as well. And I think that's going to be where we end up going. And the good news now is the Canadian regulators have spent so much time looking at us this year that I think that they're going to be in a position where they're going to be quite favorably disposed to understanding those kinds of changes in business strategy or enhancements to existing businesses. And so a lot of the challenges will be less going forward. And this is the direction of travel of adoption. We've seen it with our own eyes in the past 4 or 5 years as it relates to just investing in Bitcoin through ETFs. We've seen more and more large banks opening themselves up to allowing it for their advisors, for their clients. We are seeing investment funds holding it as an asset. If you're running a multi-asset fund, for example, those kinds of things. Like, the direction of travel continues to be in one direction. For a lot of Bitcoiners, it's too slow. I'm guilty of that too. I mean, there are a lot of days I sit around saying, like, I wish I could just hurry up to 2027 or 2028. But on the other hand, Michael Saylor made this very good point that on the occasion I got to meet him, he said, don't be too excited about trying to have the price move too quickly. The job we have right now is try to accumulate as much as possible. So you don't want it to get more expensive too quickly. And I think that's a very good way of looking at it. And that's how I try to look at it.
Yeah, lots of really great threads I kind of want to pull on there a little bit, but yeah, I mean, certainly, first of all, love the Canadianism in that analogy you brought up about plowing the sidewalk, so to speak, right? I mean, many say, strategy kind of blaze the trail, right? Which I think is fitting in general, but certainly here in Canada, it's a different regulatory body. You can't just look to another jurisdiction and say we just want to do what they've done. It takes the work to actually go and work with the regulators and help them to understand what this new model is and why it is within the regulatory confines. And I'm with you. I think the other aspect here about operating businesses that are not necessarily pure play treasury companies and their adoption of Bitcoin, I think that's also what excites me, and the work we do at Orange Wheel is really taking that to a broader swath of companies. Not saying that you have to. There's the one model. There's the Michael Saylor model, or there's nothing. It's really about, as you said, finding the right mix of Bitcoin within an operating business. And I certainly see that not only as a treasury perspective, as a reserve asset, but also for certain companies, there can be other ways to integrate Bitcoin into the business and its operations. Most notably for those in the energy sector when thinking about the benefits that Bitcoin mining can bring. So yeah, really great stuff. And I think it's the last thing I'll say, I suppose, is I've come to the mindset personally with Bitcoin price that I look at it. It's interesting to see where it's at, but it used to be the case that when the price went down, I'd get a little depressed, right? But now I'm kind of happy either way, right? If it goes up, great. Bitcoin adoption's moving in the right direction. If it moves down, we can accumulate it more affordably now. It's an opportunity to get more.
Yeah,
So
I mean, I just on that point, Ted, I think the place I've landed is the thing I concern myself with as I see Bitcoin's price move is not actually the price of Bitcoin for myself or people who are Bitcoiners want to buy Bitcoin. It actually really is more to do with the price move's impact on sentiment and the effects that sentiment has then on the speed of the adoption on the path that we're on. And it's a nuanced balance, right? Because if we just saw nothing but, strong moves up in price, that has a negative on sentiment too. There are some people who say, well, I've missed the trade. I don't want it, right? When you see very large amounts of volatility, that's the biggest barrier to adoption. And I know we'll talk about it a little bit later, but I do think the reduction in volatility overall is going to be such an unlock for broader adoption, which itself I think will lead to less volatility because you have more participants with larger amounts of capital who've made a long-term decision. But that's how I think about price, which is, to say I sleep well at night because I have strong conviction of the value, my purchasing power value being protected into the future. I think my purchasing power value is going to be enhanced by further adoption. I see further adoption coming. And I'm lucky enough that I don't need the money today to pay for my life. So the volatility is something I can be more philosophical about, but I'm not, to me, it's more about like, how does everybody else feel? Right. And I've lived this experience where when prices are rallying, I'm getting phone calls all the time. What do you think? And people are interested. When the price drops, my phone stops ringing. And if I bring it up, people sort of laugh and say, oh, that trade is over or whatever. And so I'd like to get to a more normal state where people are over time just kind of generally getting it. But this is the nature of Bitcoin. It's the nature of an emergent asset that is not controlled by anybody, that came from the path that has come along. It's very different than everything else. And, the first new asset in my career, I mean, I wasn't around when gold was first adopted as a store of value.
totally, and that's what makes it so fascinating, I think, to follow, right? Because this is like once in a millennia or multi-millennia kind of phenomenon. So seeing that, and certainly financial analysts, market analysts always want to kind of put it in a box, and that any box you kind of put it into maybe only can apply for a period of its maturation cycle. It's always kind of constantly evolving in terms of how it performs. But certainly, as you said, as I think we've already seen in the last few years, the volatility tending to decrease as measured in US dollars. And with that, the kind of broader acceptance from institutional investors that can then kind of tolerate those types of behaviors in the price. So we're certainly seeing that as the general direction of travel. And yeah, it's great to see it emerging. And at some point, Bitcoin's going to be boring, but it won't be maybe as exciting to follow anymore. But
Yeah.
it's still a long ways off. All right, cool. So let's talk, about 2025. We're here towards the end of the year now. It's December 19th, heading into the Christmas week next week, and then New Year's after that. So 2026 is just around the corner. So as we kind of look back on the last 12 months, so we've certainly seen a lot of changes, I'd say, in the Bitcoin treasury space, specifically in the public companies that are adopting Bitcoin, and also a pretty broad changes in the like sentiment swings, right? So certainly back in April to June, there was a lot of positive sentiment going around. I mean, we saw MNAVs really expand to, kind of exorbitant levels, arguably, and then kind of a chilling off and a cooling off in Q3 and Q4. So it'd be great to kind of hear your perspectives when you look back on the year. What were the kind of that you thought were quite notable? Maybe any specific milestones that you thought really drew attention besides the IPO of your own business, of course. What would you kind of, how would you look back in the year and characterize it in a nutshell?
Well, first of all, it's been a wild, wild year. Our story, our journey on this, as I mentioned, we started working on this project back in November of last year. And I'd just like to highlight that was before anybody knew that there were lots of other people also working on a similar project, right? So when we were already, well deep into putting this together, walking around to different dealers, looking for investment bankers, talking to lawyers and the exchange and the regulators, we were well into that before we started to see these very large announcements of treasury company raises, obviously in the US, but in other places as well. So that mania kind of caught us off guard, I'll be honest, because I thought that as we were talking to people, we were sort of introducing this concept of let's copy strategy, but do it as a pure play here in Canada. And it was a bit of a novel concept in a lot of the early conversations we had. And that isn't to say that I had a lot of ego in it as much as I didn't expect, or none of us expected, the wave of sentiment to be as strong as it was. I mean, it really was overwhelming. And we approached our project a little differently than some of our friends in the US. And maybe this is just because I didn't think of doing it the other way, but we built the company, structured the deal, put it all together so that we could follow an IPO style timeline of closing on the capital, buying the Bitcoin, and having all the shares free trading, with the exception of management's shares on the first day. And that meant that by the time we actually became public about what we were doing and started marketing, we were only a week or two away from all of those steps happening. But it actually put us in an interesting position because a lot of the announced capital raises in the U.S. were they had done a deal, got or done some marketing, got commitments, and announced a deal, but they had not yet actually like figured out how they were going to put all of those pieces together and have a company and have then the money settle and buy the Bitcoin and then unlock the investors. So we were quite a bit ahead of that aspect of what happened. And so that came with pros and cons. By our investors not being locked in, it meant that we didn't develop a big premium to our MNAV. We had a few days at trading at a premium, and then we sunk to a discount because it turned out that a lot of the investors were interested in the mania and were not long-term investors looking for a long-term investment, which also, by the way, all the lessons I've learned, so many this year, surprised me that people would want to invest in a Bitcoin company with the goal of long-term Bitcoin accumulation who were not low time preference long-term investors. But I think that speaks to what happens in markets, right? Is that when there is a mania around something where you have very sharp moves, and as we saw with the announcement of some of these deals where, they would announce a deal, there was a SPAC involved, there was some listed entity with very little liquidity. The excitement around it caused that entity to move way up in price, which brought in more interest and more excitement. People just assumed that was going to happen everywhere. And I think it was a very strange situation to be in as a Bitcoiner, to be involved in something that felt a lot like the kinds of mania, frankly, that we saw in the other parts of crypto in previous cycles.
ICOs, crypto, yeah.
Yes,
Totally.
and I woke up one morning, I remember, back in late May, early June, as we were coming towards the end of our process. We ended up listing June 30th. But I remember waking up one morning and saying, like, am I the NFT mania for this cycle? Because at the same time, it was also like, but clearly not, because we're buying Bitcoin, which has value, whereas, JPEGs on the blockchain, I think this is going to continue to be a struggle to believe that has long-term value. So clearly not, but the mania element was very much attached to treasury companies this year. So we really lived through that each and every day, and I wasn't expecting it. I thought I would have a cap table full of people like yourself, long-term, low time preference. Let's build this together. So I think eventually that is where we end up, because I think the investors who don't want to be here are going to end up leaving. But it has an impact on liquidity and everything else, because as we didn't have that massive bump, we also didn't get the mania of other people coming in who were also short-term holders. So you kind of have to find the long-term holders. And that's really the process that we're in right now, is talking to people who truly get it, investors who truly understand the value of being a shareholder in a company that's got the Bitcoin as its reserve inventory asset. It's why Bitcoin is the best collateral in the world, why it will continue to be so. That's the kind of shareholder base that will slowly, I think, find its way to become the preponderance of shareholders in treasury companies. But it's going to take a little bit of time to digest. It's like any big party, there's a hangover the next day. We have lived the party and the hangover this year. But I do think that what we're seeing now is a realization by the market that what's going to matter the most is how well managed are these treasury companies? Are they able to operate such that they have positive cash flow and can develop increase in Bitcoin per share through internal operations? Those that are able to achieve that have long-term staying power. Those who are able to achieve that may, from time to time, be priced at a premium to their Bitcoin by the market, just as we buy stocks at a price-earnings ratio that is positive. People are willing to pay 15 years worth of earnings for the price of a stock today because they get the future stream of those earnings as a shareholder. To a PE ratio of 15, just to pick that example. Sometimes PE ratios are much higher than that. but it's positive. I mean, it's typically a positive PE ratio. So there's a reason why positive generation of return in Bitcoin terms within a business could lead to investors seeing those businesses long-term value creation businesses. That's the business we want to be. That's the kind of investor we think should be a shareholder in our company. Those are the people that we are as shareholders, and everybody on the team is a significant shareholder of the business. We put our own money on the line here, and we are partners with the rest of our shareholders. But the mania, the market conditions, all of that was very un-Bitcoin like, if you want to think about it that way, right? It's not the kind of thing you see from Bitcoiners who say, I see the value of this long term, cold wallet, laser hands or laser eyes, diamond hands, right? Staying in for the long term. That's something that I think the treasury company sector is going to become over time. But we had quite a birth, I would say, as a sector this year, and it's been a wild ride.
Totally. That's it's really interesting phenomenon in general, right? That you bring up this idea of the kind of somewhat feeling of contradictory nature of the way the markets have kind of priced and reacted to Bitcoin treasury companies with this mania, and then the kind of Bitcoin thesis itself. And I believe, in the Bitcoin community, there's certainly been kind of like a schism in some regards too with the advent of Bitcoin treasury companies. And there's almost kind of like three broad categories, I would say, from my own kind of experience. You kind of have those that are really hardcore maxis that would only invest in Bitcoin, see everything else, even any derivatives, anything on top is like, derogatorily paper Bitcoin, and even maybe in some cases kind of somewhat legitimately fear that this is going to become the way gold did and become sequestered. The Bitcoin becomes concentrated and sequestered, and we only have paper on top of that. And then there's those that kind of, I think, understand that the Bitcoin thesis and the Bitcoin treasury thesis are compatible and also potentially complementary, and that could invest in both. And then I think there's maybe a third, which is a little bit of a hybrid, which is maybe that they understand the value proposition of the Bitcoin treasury company, but it appeals to a different investor class than those who, might be a Bitcoiner, but the investment in Bitcoin treasury companies is an interesting and compatible investment thesis, but not for a person who owns Bitcoin. It's more for as a substitute for those who want indirect exposure. I personally fall in the category of I invest also in Bitcoin treasury companies. I see them as a complementary investment with a different kind of risk return profile. But of course, what that risk return profile is I think, as you said, in the longer term, I think we're going to see the reaction during its birth has been much more volatile and bringing in the short-term hype and mania sentiment type investors who kind of want to ride the wave and get these 10, 20x returns and then try to get out. But I don't think those are the types of investors we'll see over the long term as these strategies begin to become more well understood. But I want to kind of follow up a little bit on what you said, Elliot, about this kind of separation between the successful and less successful Bitcoin treasury companies. One of the success factors you brought up was the kind of ability to increase Bitcoin per share. I think that's quite clear in any case, but you also mentioned kind of generate, and hopefully I wrote this down properly, right? Like an internal yield or an internal cash flow. Is that kind of what you said, or maybe what did you mean by that? In a bit more detail.
Yeah. So what we're doing at Bitcoin Treasury Corp is we've started a lending business. We've actually done our first loan to an institutional platform, very strong balance sheet, relationship we've known for a long time. And so you can lend your Bitcoin. And I think, to go back to the analogy that people often use, it's when you have a hard asset, you don't want to sell that hard asset. You want to make the hard asset be productive for you, right? So let's take another example. Look at a real estate investment trust. It buys real estate and it then rents out that real estate to generate positive cash flow. And it uses that positive cash flow to either return to investors or to buy more real estate, right? And so the question is, okay, well, how can we make money on holding Bitcoin? If you just hold it as an inert asset on your balance sheet, you're not doing anything. You do need to be able to generate some kind of return on the Bitcoin. And so our lending business is very squarely aimed at that. We believe that over time, there will be more and more businesses that we can build on top of a Bitcoin treasury asset, because its recognition as a collateral value is only increasing to the point we were saying about, the direction of adoption. And so Bitcoin is being mixed in with other credit products to make bonds that include Bitcoin right now. We've seen mortgages like that in the United States. Bitcoin, I think, as a collateral asset will, I mean, the dream for it eventually to take off is that it becomes considered tier one capital as a bank reserve. I mean, to get there, you need like the people who come up with these Basel ideas, Basel III, to agree, and then the local governments, each country, OSFI in Canada would have to also agree, and then the banks would have to agree. So that's a long way away, but it's not impossible to think of that coming as inflation continues to get worse and worse and worse. So what does that mean? It means, like, from a strategic perspective, when you look at our business, we've got two things. We've got an inventory asset that we expect to continue to drive value in Canadian dollar terms if we look at the history of its value in Canadian dollar terms. And then we have that same asset becomes more and more in demand by institutions who are looking to use it as a collateral asset within their businesses. So sitting on a reasonably sized pile of that asset becomes strategically valuable. And our ability to essentially lend it out or provide it in some form of a service offering that then we can get a fee back or interest back or something like that allows us to buy more of it is essentially the business plan. So we started that with our Bitcoin lending business, which we were very happy to get off the ground with our first loan about a month ago. So that's the basic plan here. I mean, it's not very complicated, and it sounds more complicated than it is, but if you want to know what it looks like in fiat land, that's what banks do with cash. I'm not talking about fractional reserve lending of the Bitcoin. I don't think that's a thing that is going to take off. I think the great thing about it is it nails everybody back down to being fully backed in whatever they do, because everything is examinable through the blockchain. And this is what separates Bitcoin from gold, right? Like Fort Knox, I understand, has not been audited for a very long time, which surprises me because it shouldn't be that hard. Meanwhile, I can audit somebody's Bitcoin balance in 2 seconds on a blockchain explorer with my web browser from anywhere in the world. So I don't think we're going to go to fractional reserve banking, but I do think services built on top of Bitcoin as a collateral element of that service is the future, because it's just such a useful element, right? And again, back to gold, and I'm not trying to bash on gold, but it has limitations that mean that it would never get as integrated as we would like it to be. The closest we got to gold being integrated into our financial system was when our currency was backed by gold, and that really was just a way to provide more portability and divisibility of gold by offering IOUs against gold. But Bitcoin is liquid, super liquid, infinitely divisible. You can trade it 24 hours a day, 7 days a week. Great price transparency. In many ways, in all of those features, it beats traditional assets, right? It's better than fixed income on every one of those metrics in terms of its ability to be traded and everything else. The stock market opens and closes during, week hours, and then it's not open on the weekend. So when you include Bitcoin within your financial structure of anything that you're putting together, you have this thing that is priced in real time that you can liquidate if you need to raise capital or meet some kind of other need. And that flexibility is another reason why we think that the adoption is going to grow. So our business plan is to be part of this change. The obvious first step was lending our Bitcoin, because there are those out there with very high quality businesses who borrow Bitcoin for operational purposes. But beyond that, I think that the future is bright for companies that are looking to build Bitcoin products and services, because it's still so early, right? The fact that we're even having this conversation talking about, the banks aren't there yet and other companies aren't there, it just shows how early we are. So that's essentially the plan of what we're trying to do.
Yeah, okay, really, that helps kind of clarify and make it more tangible what's meant by that kind of generating an internal yield and being very specific with the lending aspect. I think it's also kind of a competitive advantage for Bitcoin Treasury Corp in that you guys have the licenses to be able to kind of provide that kind of activity, which most other Bitcoin Treasury companies don't have. So their levers for generating yield from their Bitcoin are more limited, certainly. So that's pretty cool. I mean, what is your thought about, if you think about strategy as another company? I mean, they Sailor, at least for now, and I think arguably as he builds a bigger stack and as things change, I do believe he will do more with the Bitcoin to generate some sort of yield. But he's focusing primarily on issuing credit instruments to the markets as his means by which to generate financing cash flows to purchase Bitcoin. Is this also a lever that Bitcoin Treasury Corp has this in its arsenal to consider?
Yeah, we do, absolutely. We actually went through a pretty extensive process to get a base shelf prospectus approved by the regulators after we went public. So we do now have the ability to offer more equity, preferred equity, more forms of debt, and other things.
Mm.
And it's very interesting watching the different experimentation that's happening. Strategy is doing a great job, obviously showing one way to do that. I think in every different market jurisdiction, the needs of that market will be a little bit different. And so it's about tailoring it, which again, I think is where we have some real advantages, being the largest in Canada and the first here in Canada to offer this and to have the connections and network that we have within Canadian financial services. But the way we look at our business, we look at it in kind of two halves, right? In terms of when we think about how do we increase the amount of Bitcoin we have on a per share basis. One half is the internal operations I was talking about, lending services and other things that we can bring to market as there's more adoption. The second is what we can think of as essentially external capital formation. So that's what we're talking about if we issued preferred shares or common equity or convertible debt or whatever it is. The second element, that external capital formation element, is very sensitive to market conditions. If you're trading at a premium to the value of the Bitcoin you have on your balance sheet, you can just issue more equity and buy more Bitcoin. If you're not, maybe there are ways for you to do some kind of structured offering or do some kind of debt offering or something along those lines that could still be accretive, but it's a different kind of thing. And for the most part, if people don't want to buy your equity or your debt, then you're not forming capital in the secondary market. But that's very separate from the internal operations, Bitcoin lending or other activities where you could then generate a yield. And I do think the two connect with each other quite nicely, which is if you're showing that you can generate more Bitcoin per share through internal operations, you're more likely to get shareholders out there in the marketplace who say they would like to participate in your company. And I think strategy they're being rewarded for being so early and so big and so committed to this that they have a large following. And that large following means that it's great for them to then market more of their external capital formation products, if you want to think of their shares and their convertible debt and their preferred equity as products. But for everybody else, you need to kind of build out that audience. And I think you have to prove out what you've got. So one of the things that we also just announced very recently is we have been approved to do a share buyback program by the stock exchange. So if you're trading at a significant discount to the Bitcoin that you hold on your balance sheet, you can buy back your shares, and that again increases Bitcoin per share. And I can't sort of say this too often because it's the North Star of the company, Bitcoin per share. That's why a shareholder of our company would be happy to own our stock instead of physical Bitcoin or a Bitcoin ETF. They would get more Bitcoin over time if we can increase Bitcoin per share. It's why we started the business. It's what I personally want is more Bitcoin. So to do that with that focus, if we're trading at a discount, counterintuitively for some people, we could actually sell some Bitcoin, buy back our shares, have less total Bitcoin, but have more per person who is a shareholder. That would be a worthwhile thing to do, right? There's nothing magical about never selling your Bitcoin. If that results in more Bitcoin for each shareholder, then that's fine, because people who are selling their stock back to the company through that buyback program are the ones who are taking the other side of that and essentially facilitating that. And so we have these two levers to pull for external capital. One is to raise more money and buy more Bitcoin if we're at a premium to our valuation. The other is to sell some Bitcoin or use internal cash from operations from our lending business to buy back our stock when we're trading at a discount. And this is essentially the plan going forward, is to then do that to drive up more Bitcoin per share. Because at the end of the day, I think proving that we can do that also probably results in us trading at less and less of a discount over time, because people are going to say, well, these guys are actually delivering on driving more Bitcoin per share. So I'll take some of my Bitcoin investment and I'd buy the stock instead with that because I want to have more over time. So it all connects together. And what I do, again, really love about being in this business right now is there is so much experimentation. There's so many other great examples you can look to. There is so many conversations happening in the marketplace about this. It is very, very exciting. But I think when you zoom back out, it's not that complicated. Everything comes back to, I want more Bitcoin. I want every shareholder of my company to have more Bitcoin because I'm a shareholder of my company and we're all partners in this. We're all trying to get more Bitcoin. Again, while it's still cheap, because it's still early, because the adoption hasn't happened and all of those things. And so that's kind of how we think about the two fitting together.
Awesome. No, it's great to hear that perspective and going into the details about what levers you pull under which market price scenarios. And I was actually gonna put you on the spot to ask about would you sell your Bitcoin to buy back stock if you're trading at a discount? And didn't want to. I didn't know if you'd be breaching any sort of communication issues as the CEO of the company. So I'm glad you brought it up yourself. It was something I would love to ask. And I think that is one of the mind shift changes that I think we will see in the market when people, as you said, right? It's not the number of Bitcoin per se. Of course, the more Bitcoin you have, the more optionality and financial strength you have. Really, the KPI is the Bitcoin per share. And I think as investors, more and more investors start understanding that, start using that as their KPI for their own perspective of how to allocate their own capital. You'll start attracting those types of investors who then value the businesses that are bold enough to kind of make that move to sell some Bitcoin. So I think there are certainly, again, it's a bit of a schism in the Bitcoin community. There's many, people want in some of these spaces. Some people are like, if MicroStrategy sells any Bitcoin, the price, so the market price is going to crash. Everybody's going to lose confidence because Michael Saylor's been going off on his word, and I'm the mind instead of saying if Bitcoin per share is going up based on those activities, I'm in for it, right? And
Yeah.
and I think as you say, like the market will then catch on if you start acting that way. They will price that in, right? They'll know that okay, the management's going to make this move, and therefore, I think you'll see less as you say, less often will the price drop below one on the MNAV side. So I think if that's one theme that we're kind of expecting to see in 2026, are there any other kind of themes or trends that you think we should, before we go into the predictions part of the interview, any other major themes you think will emerge in 26?
I think we're probably going to cover them in the predictions section in terms of themes ahead. So I don't want to steal any of your thunder on that game that we're going to play, but maybe I could just say one that I don't think you've got on the list that you shared with me. We're going to be surprised. Okay, like everybody just get ready for that. That's how it works, right? We're not going to go into this year knowing what to expect, and I think that's more true than ever for 2026 because I think people who follow the Bitcoin cycle aren't quite sure anymore because it doesn't look like it's the same. And, adoption's continuing on, and we've got, great support from regulators and governments we've never had at this level before. So I just think it's like, there's a real stay tuned component to it. And I just think, I just keep sort of telling everybody, like, make sure you can relax, make sure you can step back, absorb it all, not fuss too much over the short term, not fuss too much over today's like most, controversial subject or whatever else. Because I don't know how everything's going to turn out, what the path is and the speed is, but I do know where we're going. And like that's the thing that I think I'm most excited about. So anyway, that's my preview of what I think of 2026, which is to say I don't know what's happening, but I'm happy to chat and speculate and guess as much as you'd like to.
I think it's good that we preface that. I think there's nothing more dangerous than trying to make predictions about Bitcoin.
Yeah.
So it's good that we kind of protect ourselves from any of these predictions that we're going to make. So let's dive into it. We have 7 over under questions, so we'll kind of alternate who gets to do the pick, starting with you, Elliot, for the first. So I mean the classic question: Bitcoin price. It's December 19th today, 2025. We'll set the date as December 19th, 2026. We agreed on an over under threshold, and this is kind of a little bit out of the hat, to be honest, because Bitcoin price is so uncertain. But we set it at $115,000 per Bitcoin. Would you like to take the over or the under?
But first, with the proviso that this is not investment advice and I can't tell you where prices are going. But yes, of course, for the sake of this game, I'm going to go over on this time next year. And my reason is because I am in the camp that the shape of the cycle is changing from what it was. And this cycle, obviously, this 4-year green, 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 red candle, pattern that we've seen. And I'm of that opinion for several reasons and one, observation. So the observation is we didn't see the end of this year turn out the way that it was supposed to. And in fact, we haven't seen this year be the big, strong third year of a bull market. Okay, so that we just know to be true. And I think therefore, investor sentiment around what happens next year is totally different than what it would have been. I think if we'd seen the price of Bitcoin, let's say we were having this conversation right now and we touched, $300,000 Bitcoin in November, and now we were down to like 275 or 250. I think a lot of people would be sitting here going, "Uh oh, this thing's going to go down to like 50K next year," and they'd be, and then it would be a bit self-fulfilling as a prophecy. Instead, I think what happened was, um, because we hadn't seen such a strong year, there was a little bit of a pump in October, because October is always sort of a meme month in terms of October and everything else, and I love that meme too. But then we saw that not be sustained, and I think it's changed there. But I think there's a reason for the change in the pattern that's much more important than just some behavior sentiment of people who follow cycles. The investor base within Bitcoin is radically different today than it was 4 years ago. That's why I think the shape of the cycle is different. We've got ETFs in the US. Yeah, we had them in Canada back then, but Canada is a small part of the global market. Those ETFs in the US have brought in institutional investors, right? We know, from example, Harvard's endowment has a Bitcoin allocation. Okay. The election of the Trump administration has put Bitcoin as a strategic reserve asset for the US. There are 3 US states who hold Bitcoin as a reserve asset. Texas announced their holdings recently. And I think those things send a big signal to the market as well. So you got institutions, retail investors, government entities, along with then further retail adoption, more wealth management platforms, advisor networks, banks, etc., are allowing their advisors to use Bitcoin. It's a different investor base because a lot of investors operate on the basis of changing their strategic asset allocation very infrequently. And once they change it, they stick to it. So if you say, I'm going to be a 2% Bitcoin allocation rebalanced twice a year in your portfolio, well, then you become a natural buyer if the price is softer, and that provides stability and also long-term conviction. And I would point it out that it's in stark contrast to the leverage we saw in the system during previous bull runs. I mean, we saw you see leverage build up anyway. You can see it online, various different derivatives markets, but a lot of the leverage that was there in the system around 126,000 in early October was flushed out by the drop that we saw since then. And my understanding is that we've got a couple of expiration dates between here and the end of the year that could really reset that as well. This sets you up for a very structurally positive year in 2026 because you're not sitting around with people who are just hanging on by their fingernails to a highly levered position to hold the price where it is right now. Or to put it in other terms, I think we have a spot-driven market, and for the most part, spot-driven price discovery that is now going to act much more as a way to describe the adoption of Bitcoin as an investment asset across a broader audience. And I think that all sets us up to 115. And my favorite thing about this question, Ted, is 115 1 or 2 years ago would have seemed crazy. We would have said, how do we get to 115, right? It's just like, that's so far ahead. And now it just seems like, yeah, well, because we were there and so on. And, I mean, people are crying because we crashed down to like $80,000. Like, I love it because, I've been in since 4,000. I think you've been in even longer. Like, this is the nature of being in Bitcoin. So anyway, so there you go. I'm over on that.
Love it. I've written it down. I do love, those kind of memes you see where it says Bitcoin's lowest price in each year, right? And that's kind of an amazing chart to kind of get a good perspective also on the general direction that we're dealing with and help to zoom out. You couldn't agree with more in terms of the general adoption that's happening under the surface. And of course, on top of the surface, you have the kind of speculation, you have the leverage and all that. If that does indeed get wiped out, I'd love to see a more consistent price appreciation that's in line with the underlying adoption trends. So I think that's great. I'll take the under as I have to. I hope I'm not right. I hope you're right on this one, but let's see what. So second one, the lowest Bitcoin price in 2026. We've set the threshold at 80,000, which it did just touch here a few weeks ago. So I'm the one to make the decision on this one. I'm going to put my doomer hat on. I'm going to say I'll take the under. I think the only rationale I really have for this is I do see geopolitical kind of tension growing in terms of potential conflicts, both in terms of trade wars, but increasingly blockades of Venezuela and kinetic war. Of course, it's ongoing in Europe, and so I could imagine that there's going to be some sort of event, or it could also be a bubble popping in the AI market that leads kind of a negative price move in all assets, where everything kind of correlates to one in these events. I don't see it as a sustained drop, but I could imagine there's a situation where everything kind of does move downward in some sort of fear event. I expect Bitcoin to kind of rebound early and strongly in such an event. And so I'm gonna take the under just based on kind of a correlation to a more macro event potentially occurring in 26. Again, kind of hope I'm wrong, but this is my kind of contrarian view for now.
So look, I obviously have to take the other side. My argument for under, because it was my initial note, was that just always bet on it going lower than you expect, but it doesn't mean it stays there for long. So you could see a deep wick down, and then that's that, because, leverage and sentiment and things like that. And then lots of stuff becomes pretty cheap at that point in time. Treasury companies and miners and everybody else in the Bitcoin ecosystem will get thrown out with the bathwater. So I'll take the over and I'll provide my rationale for the over. I'll give another bull case. I love taking the bull side of this. I think we see a significant easing of financial conditions going into 2026. I think we see more liquidity going into the system. There are a few reasons for that. Politically, it's important for the Republicans to try to have the market running hot into the midterm elections in November of next year. I think we've also seen an increase in liquidity, or I should say, I think quantitative tightening has ended for sure now, and I think we're starting to see increases in liquidity. It's a very confusing subject. There are people that I would recommend your audience follows if they don't know them already. Lynn Alden being, I think, my favorite in terms of this, but also Luke Roman is also amazing. They track this stuff and know it better than I ever will. But I think the short story is that dollar liquidity or fiat liquidity is going to increase in the system because the governments that have significant debt problems have no choice but to allow that to happen. It will take many forms that will seem confusing, swap lines and, treasury general account refunding and all kinds of stuff that I don't fully understand. But the point is, more liquidity in the system means more dollars in the system. More dollars chasing assets means asset prices go up. So it's not just good for Bitcoin. It'd be good for gold, real estate, equities as well. I mean, everybody's talking about gold at the moment like it's like, oh my God, is gold's the best asset ever because it did well this year after years of sleeping. It's now done its job. And so I'm happy for gold investors. But I think Bitcoin is more sensitive to liquidity increases. And so I think there's a very good chance that the increase in liquidity in the system could see us having a higher floor on Bitcoin's price just because of the total amount of dollars out there, which is going to be my justification for taking over 80K. I also am happy to take over on this one. It's the one that if I'm right next year, we'll feel better about. So there you go.
Certainly. Yeah, Lynn Alden and Luke Roman both very well articulated in discussing the kind of macroeconomic drivers for the fiscal dominance that we're kind of in right now and all those drivers. I totally follow both of them. I did, just on that note as an aside, I did catch Luke Roman on a podcast last week where I think he actually said he'd exited a lot of his Bitcoin positions. It's so bullish, and he's just in for a short to medium term. He kind of has his new outlook is kind of potentially 1 to 2 years of lackluster performance. I am of the camp that nobody can really know what's going on. I would not try to trade the market personally, but I found that a bit of a surprise. Let's go into the third question now. This will be your pick again, Elliot. We're talking about Bitcoin price volatility. So this is an annualized daily average of volatility, price volatility. And we've set the threshold at 40%.
Okay. I'm going to say over, but slightly. And going to caveat that by in the long term, it's going to be lower. So that's me really answering the question from both sides of my mouth. But I'm saying over for next year for a few reasons. First of all, it was very close to being over 40 for most of this year. And this year wasn't actually that exciting a year in a lot of cases. Bitcoin went sideways for quite a while. So it still is a highly volatile asset when measured in terms of annualized volatility. I don't think people should lose sight of that. That being said, I do think over time with more adoption, more decisions being made, larger pools of capital coming in, we see volatility drop. It's the other element of adoption going up as volatility goes down. So I'm a big fan of volatility dropping. So I'd love to be wrong and it being under. I'm just not sure adoption's where it needs to be there to get there yet. And then my market technician hat, just to put that on for a second to make another point about why, or about volatility in general, is I think we're seeing with more listed derivatives like IBIT options are very liquid, for example. The futures markets are very liquid, and treasury companies are also a derivative of sorts. There are other places volatility can go, and volatility, the way I think about it with an asset, is it's inherent to an asset, but it can be portably moved to a different market. That's what the futures market is, right? Like, go back in time, right? Farmers grew grain and sold it forward to the bread factory, who bought it forward so they could lock in a price before they knew if the harvest was any good. The volatility went from the spot market to the futures market, right? That is true more so than ever within Bitcoin as Bitcoin becomes more mature, which means I think over time you'll see the volatility there rather than spot, which is another argument for under. But as I'm sorry, I'm kind of taking your commentary around this. Since I took over, you have to take under. But those are just some thoughts around volatility.
Great. No, really well thought out. I'm forced to take the under, and I'm content with that. I think if we were around 40% this year, year on year directional movement is lower. So I think there's a good chance we can be under 40 next year, just based on kind of the big picture perspective, as you kind of elaborated on. And it's a little bit inconsistent with my kind of doomer view of some sort of massive event happening where we see some massive volatility dropping below 80%. But I'm happy to take this one, and maybe next year Bitcoin's just super boring asset again, and just kind of inching up gradually. That would be nice to see. And this is an interesting way of thinking about the volatility and how it kind of moves from one market to the next. And I suppose just one kind of follow-up perspective on that, I guess, as we see more Bitcoin Treasury companies kind of buying Bitcoin, and then companies like MicroStrategy that are issuing preferred stock, I guess they're also kind of sort of stripping volatility out of the Bitcoin price and putting it into their equity price, right? So it's kind of an interesting another contributing factor to that diminishment of Bitcoin price volatility. Moving on, so number 4. Number of public companies holding Bitcoin, and we're going to use bitcointreasuries.net as the source of that information, assuming it is comprehensive. We've set the over under. So I think today, if I'm not mistaken, it's something in the vicinity of 170, 175 maybe. And we've set our over under at 275. This one I have the privilege of taking a stab at. I'm going to go and with the over. I think, as you brought up in the story about Bitcoin Treasury Corp, kind of not being aware of the other companies that were thinking along the same lines, both in Canada and other jurisdictions. I imagine there's this kind of next wave of companies thinking along the same lines. I imagine it could be a bigger cohort even than the last wave. And I suppose there's going to be kind of my thinking is when the capital markets and sentiment shifts, I think a lot of them will use that opportunity as a window to list or make their pivot. So I think there's this kind of timing the market sort of thing when they try to kind of optimize the valuation they get from the markets at the IPO when the sentiment is high. So assuming we do have kind of one of these windows opening, I imagine the floodgates will open and we'll see a large number of new companies announce slash IPO. What are your thoughts?
So, well, in my notes, I'm on the same page as you, but I'll take the other. I'll take under, and here's the argument for under. We've seen such a hangover from the Treasury mania earlier this year that I think there are a lot of people who might have considered putting Bitcoin on their balance sheet, CFOs of other companies, who might say, "Hang on a second, I don't want to end up like one of those Treasury companies that imploded." Even if we all come back to stronger strength in the future, there are those people who would look at it and say that didn't work, and now their minds are closed and they won't be opening up their thoughts to that for a while. So I think maybe there has been there'll be like a plateau of roughly the current number of companies until we see further more constructive reasons why Bitcoin is viewed as okay. And so I'll take the under, but I guess maybe where we're in violent agreement, we're not going to be under for long. But luckily, this is a 1-year bet, so I can take the under, and I might win by this time next year, maybe.
It'll be a fascinating one. I think amongst all the ones, I think this is kind of one of the more exciting ones to see how it pans out. I'm excited to see how. Number 5. This one's yours, Elliot. Number of net additional sovereign wealth funds disclosing Bitcoin holdings. So today, the only one I am aware of, and correct me if I'm wrong here, Elliot, is the Luxembourg Sovereign Wealth Fund. This is like Bitcoin only full holdings, not Bitcoin exposure through other assets like MicroStrategy or other Bitcoin treasury companies or ETFs. So Assuming that's correct, and it's only Luxembourg, we've set the over under at 2.5, meaning three or more would be over, or two or less would be the under. So, first of all, is my perspective on the Luxembourg sovereign wealth fund indeed correct from your perspective?
Well, I was going to ask, what do you think of the US? They have physical Bitcoin. They call it a reserve asset.
So, I don't consider that a sovereign wealth fund per se. So, it's
Okay,
not in
so
the
it
fund.
has
It's
in the form of a wealth fund is what we're talking about here.
yes,
Okay.
precisely.
Okay. Well, look, I'm going to take over because I'm bullish, and I think the reason I can take over is because there are lots of other sovereign wealth funds in the world, especially in oil-rich countries and so forth. And it doesn't take a lot for each of them to just have a decision to go a couple of percent into Bitcoin and announce they're doing it. So I'll take the over, but this is very outside of my wheelhouse because I don't talk to anybody who runs a sovereign wealth fund.
Understandable. I guess there's not much for me to add to that. I'll be taking the under as I have to. I guess the only argumentation I can sort of say here is this is specifically saying those that are disclosing Bitcoin holdings. My hunch is that there's many oil-rich countries, potentially Asian countries with sovereign wealth funds that indeed have Bitcoin, have been playing around with it, have maybe been accumulating through mining, that just choose and elect not to disclose simply because they don't have to. So I guess it would have to be probably European or other OECD countries sovereign wealth fund that would feel obligated to make such disclosures, unless it was politically beneficial. I think for one of these companies, sovereign wealth funds to do so. And I think there's an advantage of asymmetry of information to not disclose in most circumstances.
Yeah.
So I'd see it more as a not adoption perspective, but more on a disclosure side that would keep this potentially under 2.5.
Yeah. Yeah. Fair.
But again, I'm not a sovereign wealth fund expert either, so it's a little bit certainly outside my wheelhouse. Moving on to number 6. This was yours. Oh, sorry, this was mine. Number of net additional central banks disclosing Bitcoin holdings. This is net, net additional. So we're setting it at 1.5, meaning one net additional would be under. 0 would of course be under, and 2 or more would be over.
You're taking this one.
Yes, thank you. Yeah, so the only one I'm aware of at this stage that's actually playing with Bitcoin as a reserve asset at a central bank level is the Czech Republic. They announced this earlier this year. I think just actually quite recently here in November, if I'm not mistaken. And really, I think they've disclosed it very much as just an experiment at this stage. Certainly, Christine Lagarde has been quite adamant about not moving on it. Any questions posed to Powell? He has been quite diminutive when he talks about Bitcoin. Swiss National Bank has been somewhat receptive, but they certainly speak to the volatility and the liquidity concerns before considering it as a reserve asset. So certainly the larger banks, I think it's very unlikely they will adopt it, even at an experimental level. But I think the Czech bank sets a signal for maybe smaller and more smaller intermediate banks around the world to maybe consider it. And since we've set the threshold so low, I'm willing to take the over. I think there will be more experimentation with Bitcoin at central bank level. I can't say which countries, but I certainly think there'll be 2 or more next year.
All right. Well, I'll take the under happily on this because I think central bankers are actually trained. Like they, in some cases, have university degrees in missing the point and not understanding money and not understanding anything. It's the blight of Keynesian economics combined with a career of being rewarded for being wrong. I think we feel that more than any other country in the world, and I won't say much more than that, but we've got a central banker running the country. And I just think at the end of the day, like we all know as Bitcoiners the amount of eye-opening thinking and reading and podcasts and all the stuff that we've consumed to get us to the point where that aha moment, right? And we were open to it. I think by definition, early adopters are open to new ideas, right? We're willing to update what we thought based on, previous information, but now with new information. I just think if you're running a central bank, you're part of this sort of sclerotic bureaucracy that's like, you're going to just read what happened yesterday and try to do the same thing today. So I think that slows a lot of that progress. And I really do hope, this is my hope, is that we can see broad-based adoption of Bitcoin in entities like central banks without it requiring a crisis to get us there. because oftentimes that's what causes a big old bureaucratic institution to change their thinking on something. We saw it in the GFC in 2008, and we saw it during COVID in certain kind of institutions. And I hate it when you take a crisis to get somewhere that many of us have already seen as a healthy thing to do. So I really hope you win this one. And are you under?
I'm over. I'm over.
You're over? I hope
Yeah.
you win. I hope it's all of them, but I don't think so.
Totally. And I mean, I think that, yeah, just the last kind of point there, I do believe it's the ones that are, in general, the ones that are more in weaker positions, right? That it will need Bitcoin more to kind of ultimately kind of protect their own currency by using it as a reserve asset. So I do think kind of like some degree of necessity might be the driver, less so than kind of proactiveness, I guess. And yeah, I think on the central banker side of things, yeah, I couldn't agree with you more with Carney. Won't go into the political discussions, but the a funny joke I remember hearing on some podcast is saying that central banks are a factory for acronyms. It's what they predict more than anything else, right? So they can be very innovative when it comes to ways to kind of get more liquidity in the system and kind of conceal what they're actually doing in many ways. But yeah, certainly not in terms of receptivity for new ideas. Okay, we're moving into the last one. So thanks so much for your patience working through this, Elliot. This one will be your selection, and the question is Bitcoin holdings of U.S. government entities, including U.S. states. We've set it at 350,000. I'm just going through BitcoinTreasuries.net just to kind of see what the current holdings are at today's valuations. And of course, this is based on known disclosures. There could potentially be some clandestine holdings that we're not aware of. But if we assume that the numbers we have are correct, the U.S. is holding 328,372 today. And I believe that includes the small amounts held by the states as well. And the threshold's at 350,000. So would you like the over or the under?
Well, I think I'd like the over. I only got 22,000 to go. I'd take the over on that. No problem. Yeah, and maybe just the real question is, do we end up with more states with Bitcoin reserve legislation and starting a Bitcoin reserve next year? We got, I think, 3 now, right? Texas being the most recent one to announce their holdings. You got a lot of states in the U.S. Plus the U.S. government. You never know if we have a bill to start to accumulate Bitcoin at the federal level. There's a lot of things. And those are the things that I don't like to think about too much because it makes me too bullish, because you start to think about there's one entity in the world that truly has a blank check, and that's the US government. And if they got serious about this, that would be serious for any market. Doesn't matter what the market is. But that being said, I mean, again, direction of travel is clear. These things are not going to go in the other direction. I don't think that you're going to see the state of Texas say, forget it, we didn't mean it, and then just sell their Bitcoin sometime next year. I just think that once entities like that get committed, they grow. And so given the level is so close to the current amount, I'll take the over on that.
Okay. And I'm all right with the answer in this regard. I hope I'm wrong, but I can certainly see that, certainly for now at least, the most of the Bitcoin are being accumulated only through confiscation, seizures. Yeah, given that it's a midterm year next year, I think they may not want to rock the boat too much with something that's still quite controversial. A decision to use arguably use funds that could go to some other programs to accumulate Bitcoin. So I think in terms of the actual Bitcoin reserve and active accumulations, I think it's kind of unlikely. But then at the state level and through seizures, I think they might be able to get over it. But I think we'll certainly be higher than we are today, but potentially not over the 350,000. So I'm okay with the under. And I hope other countries besides the U.S. accumulate more Bitcoin, to be honest. So I think that would be nice. It's been a nice chat, Elliot. I really appreciate you taking time out of your day, especially in the holiday season, to join me here in the discussion and playing what I think was a pretty fun game as well. And really looking forward to reconnecting with you about a year from now and seeing how predictions have fared at that time.
Yeah, it was great fun, Ted. Thanks very much. Appreciate this, and looking forward to a great year next year. So happy holidays.
Thank you. And before we sign off, if folks want to learn more about Bitcoin Treasury Corp or potentially get in touch with you directly, what's the best way for people to go about doing that?
Yeah, the best way is go to our website, BTCTcorp.com. You'll see there all the ways to contact us, follow us on our social media, see all of our press releases and so forth. So BTCTcorp.com.
Great. I'll make sure I put all those links in the description, and wish everybody a happy holidays, Merry Christmas, Happy Hanukkah, Happy New Year. Elliot, thanks for your time.
Thank you.